First solar and gold don't shine anymore. So why is Avon calling? Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your 1 p.m. market update for Wednesday, the 14th of December. Here we go again in Europe. Europe comes front and center again in every investor's minds as Italian bond yields hit new highs. King dollar, the euro falls to its lowest levels in 11 months. Long live the king. And where are all the gold bugs? Do they all get squashed? Everyone is bailing out of the gold market. Today we examined if now is the right time to get long this fallen metal. And we also going to be looking at 3 stocks. These stocks are having big percentage changes today, but did any of these moves really change their big trends? We'll examine all 3 stocks with our trade triangle technology and see if those stocks are worthy of your consideration. Now, let's go to the one truth that we can count on every day here at MarketClub, and that is our trade triangle technology. So here we are. We're looking at a chart of the ProShares Ultra Short Euro. This is an ETF. You can see a plus 90. I've left our triangles on. The monthly is right here. Long from 1805. You can see it here. And also our last weekly signal was long from 1850. Market's currently trading at 2013. Market is clear of any resistance. We're looking for the euro itself to go down to about the 122 level, which means we're going to see a significant move up in this market if the trend continues. So generally speaking, the trend is your friend. Let's go to our portfolio and let's take a look at the real euro US dollar cross. This is the spot market. This is trading right now live, up to date. And as we can see, it's a minus 90, a strong downtrend. The EUR is, of course, the inverse, meaning when it goes up, the euro goes down. So let's take a look at this market. The one thing we've been pointing out to you, and let's scope this out just a little bit further to give you a sense of where we are. The one thing we've been pointing out on a close only was basically the 132 level. We closed below that a couple of days ago, and you can see we're moving down. Now, how we measured this before was quite simply, we took, I'll put my telestrator on here so we will give you an idea. We basically just drew a very simple support line right here, and you can do that also with the trend tool right here, the trend line tool, but I just want to do it with an illustrator just to give you a sense of where we are. And you can see if you measure from the highs, let's say I'm going to round this up just to make it very simple math. Let's say 142, which is right here, and the low is 132. That gives you 10, a difference of 10 if you subtract 132 from 142. So you can flip this down, and it should give you 122. So I think certainly that's the level we would be looking for this market to go get out. Can it have a little rally, like a little pop like that? Yes. Can it test the 132 level again? Yes, it can. But generally speaking, the trend is based on our trade triangles, and they are all negative at the moment. Minus 90 means a very strong trend. Now, these are currency markets. Unlike a lot of markets like, say, stocks that tend to get overbought, oversold, it can happen in this way, but it's really driven by country fundamentals. And the fundamentals for, obviously, the euro in the Italian, Spain, Portugal, you name it, debacle of France, it's still not good. It's not likely to get good at any time. Even Angela Merkel is saying that today. It's going to take years instead of months. So this is a market I think is going to eventually move down to the 120 level, possibly even going to par with the dollar. So we'll see how that works out. So let's clear this off the screen, go to our next market. And we'll start from the beginning, which is kind of how we start every time. But let's go back to our portfolio. Let's start with a minus 75 for the S&P 500. Certainly does not look that great. We've been looking for this market to come back down. I'm going to put a 6-month chart on here so give you a little idea where we are. We were looking for this market to come back down to the 1200 level. We got down to as low as 1209 today. I think we'll still see this 1200 level hit. And I think it's going to be probably towards the end of the month, maybe even lower than that. But we derived this 1200 level based on our Fibonacci tool, and we just simply went from the highs down to the lows, and you can see it just came in right around 1200. That's a 61.8% correction. So I think that's something we're looking for right now. Now, also, you've got the market was overbought. We're coming down. I think we want to see this market get down below the oversold condition, which is minus 80, and I think we'll see that occur. Also, with our MACD, we're just seeing this sort of rolling over. I think the next day or two we can see that go into a negative mode. But right now, we're sort of in a broad trading range, for want of a better word. Once our weekly trade triangle, which is right here from 1264, turns negative, this will be very, very bearish for this market. Now, obviously, we're getting close. The 15th starts the official silly season, in my mind, in terms of the markets get crazier than they even are because of thin volume. So there's something to be very, very aware of in the current market. So let's go to our next market. In the next market we're looking at is silver. Now, silver took a big dive today, down 5.9%, almost 6%. If you remember what we've been talking about before in this broadcast, I want to take these triangles off and make it as simple as possible. We've shown you this before with this market. We felt the market was, let me just turn this off also. We felt the market was rolling over, and then boom, we felt similar. This is a rolling over type situation, boom. Now, can the market go lower? Yes, I think we could see silver potentially at $20 an ounce, which is considerably lower than we are right now. Now, can we, let me just clear this off the screen because I want to show you something else. And that is, if we just put a close-only chart, you can see this is a very important close back here. And this is on the 25th of September at 29.06. We're currently 29.12. If we close under 29, that's going to be very, very negative for this market, indicating a move, an accelerated move, perhaps continuing for the next few days. We are in oversold territory. Our MACD, our MACD has turned down. You can see that turned down about 3 days ago. And all of our trade triangles, as we have them here, are all negative, indicating a strong downward trend. So I think the thing to look at today would be a close below that level we mentioned, 29.06, the 29 level. We're 29.07 right now, so we're very close to that level. And if we see a close below that level, I think it's going to indicate further weakness. I think a lot of people have been very disappointed with this market and the next market we're going to look at, which is gold. So here's the gold, spot gold, and it's down 3.25%. If you remember, we were talking about buying gold, selling silver on a spread because we felt the silver would collapse more. It has. It's a minus 90 as opposed to a minus 70. A minus 70 is an emerging trend in this market. So, but here we are. This market is not looking that great. And I'm going to put you can see the moves. We got down as, this is a very key level here in my mind. The low was 1532. We traded down today as low as 1563. I think potentially, we're getting close to seeing some support coming into this market, unlike silver. So the other thing I want to share with you is this, and I want to just go a line chart. I want to go a couple of years. Let's say a couple of years. That's a little much probably, but I wanted to put a trend line, a longer-term trend line, which comes in right around the 15 level. And let's see if we can get this. So if we take this, our trend line tool right here, start from this low, which we consider to be a very significant low, draw this up and up and up. You see it touches all the points we wanted to touch. It's going back to really quite some time, October of 08, so it's a 3-year trend line. And you can see it comes in just around the time that 1500, 1530 level. So we're getting very close to this as an important support line, which I think will probably hold. So we may be getting very close to looking to want to buy this market. So let's see what happens. Our long-term indicator is positive. We want to wait for some of the shorter-term and intermediate-term trends to start developing on the upside. So let's close this down, go to our next market, which is copper. We've talked about copper being in a negative market, and of course this is true. It's minus 75, and the trend clearly is down with our long-term monthly. However, the weekly is positive, indicating somewhat of a challenge for this market to go right down from here, but certainly it's an emerging trend to the downside, and you tend to think of the markets longer term with the monthlies and that tends to give you the good, bigger trends. You can use the weekly for timing, which is very, very good. The intermediate timing is use the weekly trade triangle. So again, if you're a short-term trader, you want to use the weekly and the daily. So let's go to our next market. Next market is crude oil. We're looking at the March crude oil contract. This is something we changed today. And I want to get this closer in because there's a couple of things I see here. And let me just go a little closer. And that's probably too far, 6 months. But this is the potential I see here. If we close this, I'm going to put my telestrator on here. A couple of things. I want to show the potential double top here, which is really concerning, I think, for a lot of traders, certainly myself, and this is something we look at. And let me take that off. So we have potentially a double top here, and you can see these in our, and this is a pivot point. Whoops, not what I wanted. So this is a pivot point under here, and I think that's the important thing to look at. So you've got the move from here to, let's say I'm going to round this up again to 96. So 102 to 96 is $6. If we take from 96 $6, it takes us down to 90. So that would be a pivot point target zone if we close below 96 today. So a nice move on the downside, a quick move. But also you've got a couple of things going on as well. So let me just take this, clear this off the screen. And actually I'll leave it, I think I can leave it on, and I'll just go to our Fibonacci tool. And that's going to be right here. So I will draw a Fibonacci line from this level down here all the way down to the lows that were seen in early October. And you can see if we get down to the 90 level, we're getting close to a 50% pullback at 89. And potentially we can go to the 61.8%, and that's 86 on this market. So I think if everything stays the same, if we're seeing more economic slows down both in Europe and also here in the States, then I think we're going to see crude oil move down. But we want to see a couple of things change. We'd like to see, obviously, a weekly change to a negative. This would be a shorter term play, but generally speaking, it would look as if we close below 96, then you're going to double top and a pivot point reversal, and that would indicate further weakness. So let's see how that works out. So I'm clearing the screen again. I'm going to go to our next market. And the next market we're looking at is the dollar index, which we've been right on the money on in terms of the trend. And let me just clear that off the screen. What we looked at here again was a very simple pattern, which is very powerful, and that is, I'll illustrate that for you right now. Basically, we have a very simple line we're going to draw right across here. So that's a very big breakout point. You can take the 79.50 down to the 75 area. So you've got $4.50. You go measure from here down to here, and the move is $4.50. And then we simply add that to the 79.50, and that'll give you 84. So the target for this market, based on this measurement, is 84 on the dollar index. That was sort of, let me see if I can draw that number better. $84 on the dollar index on the upside. So that would dovetail very well with our other scenario for the euro going down to 122, and we'll have to see how that plays out. But generally speaking, there's a very, very positive pattern to the upside for the dollar. The dollar is once again king. Hard to believe, but that's the reality. Most people are calling for the dollar to collapse. It's just absolutely the reverse. So let's clear everything off the screen and go to our next market. And that's going to be, actually we looked at those already. Let's take a look at the Reuters Jefferies CRB index, because this is something where we were looking for this market to go down. And in fact, that's what's happened based on our trade triangle technology. We've seen a lot of pressure on this market. We have the lows right back here on the 4th of October at 292.77. We're 296.66, so we're about $4 away. But generally speaking, you can see this market has rolled over again, and it looks like it's going to test these lows that was seen early in October. So this is, generally speaking, it's not inflationary, it's deflationary. This is a very important, if you've watched our program before, you can see we're very much in line with what's going on with these markets. But I think the other important thing to look at is this is going to be a very important support, and I'll show you the reason why. If you look at the Fibonacci tool, again, we go from the highs to the lows, and you can see this is a 61.8% retracement. Now, it doesn't mean to say it can't go below that level, but this is an important element for Fibonacci to be looking at. So potentially could be a double bottom, and we could see a reversal from here. But generally speaking, all the trend indicators are lower, indicating lower prices. So let's take this off the screen, go to our next markets. These are the ones we're talking about. Avon is up over 6% today. It's a plus 70, so it's an emerging trend. The scores we have on the side here tell you what is going on based on our trade trial. So a plus 70 means an emerging trend, a minus 55 means a trading range, and a minus 100 means a very strong downtrend. So let's look at our first Avon. And you can see, I'll go much closer than this because it's, and then I'll put our, so you can see Avon actually had a nice pop today, but however, it's back from close to the highs we saw. We were, I think, let's just see what the highs were. Oop, that's what went on. We got as high as 1792, almost 18, but we've come back down. So I would say if you look at this, just the trade trials, the monthly is certainly down. The weekly and the daily are up, indicating, and we can put those in for you. There's the daily today and the weekly also today. So those both sort of hit 1732, 1695 on the daily, but nonetheless, it looks to me like the trend has not changed in this market. I would not be so enthusiastic to want to buy this stock. It's just not there. The underpinnings just are not there. Could you see the market go to 19? Yes, it's possible, but I like to play for bigger moves than just $1. So let's go back to our next chart. That's going to be progressive. Before we go back, let's go to First Solar, because that's really something has really been under pressure here for forever, it seems. You can see this is First Solar dropping to new lows. No surprise. No surprise. And you can see the number. We're short from 132.17, almost $100 higher. And that's, I'll scope this out so you actually see where our signal came in. So there was the buy, there's the sell right there, 132.17 back on the 4th of May. And that was just this year. Hard to believe that this market has just fallen out of bed, continually going down. And of course, today, huge move down. You can see it's down over 20% today, and that's just based on the trend going down and all of our trade triangles kicking in. You can see from 40, 45, so everything has been negative on this market, so not much to get too excited about. So the trend continues in First Solar, and it looks like it's going to continue to go lower. Can it go to $20? Why not? The trend is your friend. Let's look at our last market today, and that's Progressive. 55, so we automatically know it's a trading range. And look, see how the trade triangles tell you this? Just a simple trading range, back, 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 no direction. I would be excited about this market if it were to move. Let's say I'm going to put my telestrator on again. If it were to move over this area here, I mean, if it gets over 20, I'd say, yeah, we've got something going. We'd say 20, we could maybe see this go up to the highs up here. But right now, you're in this choppy area, and it's best left alone. Hey, this is Adam Hewison. Thanks for stopping by. We have our TV show today at 5 o'clock. You're more than welcome to watch that. We'll be going over, taking your questions, and showing you a lot more different looks to these markets with our trade trial technology and, of course, with our torquing chart technology. And I'll tell you all about that when you tune in today at 5 o'clock. Adam Hewison, Full Market Club. Thanks for stopping by. Have a successful trading day, and I'll see you tonight.